so they can enjoy the humidity. It's so hot in my office, I'm telling you. Just wow. So next time, turn the screens off, eh, Brew? All right, so it is a wonderful day to be a currency trader. I know that because I am still breathing, and that makes the day a very good day. You know, it's part of our positive energy to start the day by being grateful for each other. I'm very grateful for you being here. You give me the strength to get out of bed, even though I'm a shy, humble, quiet person. So because of you, I get it. I get what needs to get done. Done. So thank you for being on my team, and thank you for posting your trading ideas on Forex.Today, all that kind of stuff. Okay. So without further ado, it is a Wednesday. Oh yeah, not oil inventories Wednesday though. That shifted to tomorrow, I believe, because of Martin Luther King Jr. Day, MLK Day. But anyways, Wednesday, January 18th, 2017, Trump can taste the crown of the presidency. It's getting close, huh? We got a lot on the calendar today, as you already know. Today is a big trading day. So without further ado, let's get on with it. So we definitely have to congratulate South Africa. Their excellent CPI report today. Good job, guys. Hey, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please always stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. It is so hot. I'm just trying to cool off. I'm like one of those shore birds, you know, those Japanese fishing birds. They're like, oh my god, I have to just cool off. Hey, my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. We're a broker. We'd like to earn your business. Our primary strategy is to earn your loyalty and your respect by providing these educational webinars to help you become a success sooner than later. We do this by having me share my 15 years of foreign exchange trading experience with you in the hopes that you stand on the shoulder of giants. Do these sessions 7:30 in the morning, Monday through Thursday, here at Forex.Today for free, and at FX Street, where you have to pay money for their premium webinars. At FX Street, I also do the biggest, most popular Forex webinar in the world. That's been going on for about 11 years. We had 1,300 people attend the last one. Cool. And partially because of that, I'm also Forex Speaker of the Year at FX Street. So, wow, triple trifecta. So good to have you. So, what happened yesterday? Well, guess what? The UK is leaving the EU. Really? Holy smokes, eh? Yeah, what a shocker. Guess what, right? There's a Brexit. So anyways, Theresa May seems to be doing a nice clean break, not an ugly break. So that's good. So the world took a deep breath yesterday. We had a big move, biggest move in 10 years. Does it say here? In case it's supposed to. Oh, there it is. Yeah. Pound dollar jumped nearly 3% for the biggest one-day gain in more than a decade. Huh. Whale oil B, huh? You see that? Biggest one-day gain. in 10 years. Well, oil B, MR fish. Once again, you notice these things are fundamentally related, not technically. Okay. OPEC Secretary General seeks stability to secure current and future oil supply. Okay, great. What a shocker. What happened yesterday to oil? Well, that's good because that's my bias. I love it. Expensive fiscal policies could lead to higher inflation and interest rate increases, says the Fed. Really? Good. Do we have to pay for Brainerd's plane ticket? Where was the conference you spoke at, Brainerd? Las Vegas. And what did you say? Increased spending could lead to inflation. Inflation could lead us to raise interest rates. Like, what was it? A third grade audience? Were you speaking? Were you speaking to an audience of strippers? I don't know what that means. Does that mean I have to take my clothes off now? Yeah. So, anyways, yeah, really? What a shocker. That's all right, darling. I'm speaking right now. Just shh, shh. Yeah. So, anyways, so that was yesterday. Let's go into Asia, which for me was still yesterday, but I'll organize it this way for now and see how I feel about it. Guess what? Property prices in China still going up in most places. Well, this is a real problem. If you've ever been to China, what you'll notice is your apartment doubles in price like every 6 months. And the last time I checked, there isn't infinite amounts of money, right? So that's going to be a problem eventually, huh? Yeah, you think? Bubble? Yeah, really? Yeah, a little Bitcoin. Yeah. So I don't think the Chinese use Bitcoin. I don't know. I really don't. I don't get it. I don't get it. They have the most, do you think? Yeah. I don't really get it. It's sort of like a whole, to me, it seems like a whole third world country, right? Third world not, thing, desirable, like Bitcoin. I still don't get it. I was, right? If you wanted to use something backed by nothing except the full faith of it of itself, why wouldn't you just use the dollar? Yeah. Yeah, Daniel says Chinese love to speculate on real estate. But what about Bitcoin, Daniel? You ever buy dim sum with the Bitcoin? Yeah. All right. Same, same. Yeah, I don't get it. Right. If you want to use a currency backed by nothing, just use the U.S. dollar. Anyways, Westpac consumer confidence 97 versus zero point 0.4 versus 97.3. I don't know. What does this mean? Australians get 20 minutes more sleep per night. Yeah, Bitcoin to take it out of China. Yeah, it's such a complicated. All right, so I don't know anything about Bitcoin. Enjoy it. Right. Some people say, oh, it's to do this or do that, avoid taxes and stuff. Hey, just make tons of money and pay your taxes. You don't have to scam anybody. Just make tons and tons of money trading Forex and happily pay your taxes. Remember that story? I overpaid my taxes by like $100 and something thousand, and I got a tax refund. Tax refund large enough to buy like a brand new Porsche Carrera. Yeah. Pay your taxes, dude. Love it. Say, hey, bro, this is for you. Hey, this is for the schools. Over here is for the old people. Over here for the crazy people that need to be locked up. And oh, pay some over here so we have roads, and pay some here so we have some airports, and let's pay for the hospitals. I mean, pay it. Love it. Love paying it. I love it. Just get filthy, stinking richer, right? So remember, in America, the more money you make, the less you actually end up paying in taxes, percentage wise. So just make tons and tons and tons of money trading Forex, right? Hey, Dr. Dre just posted first trading idea. Thank you very much. How was it? Was it pretty easy? Yeah. Just drag and drop a chart image and type type some words, preferably in English, and hit submit. Yeah, very simple. Even Dre could do it, right, Dre? All right. Yeah. Yeah, look, even Dre. Yeah. Oh, well, thank you, Dre. All right. Political positioning driven remains bogus. Blah, blah. All right, good. UK jobless claims improve more than expected. Hourly wages at highest level. All right, cool. Yeah, I guess. Germany Eurozone inflation final readings confirm multi-year highs. Good. So things suck even less. But can you see sort of the benefits of a lower pound and lower euro? So if you were trading, I don't know, let me guess, it was like 3 years ago. The economic conditions were actually a fair bit worse than they are now, and the pound was way overvalued, and the euro was way, way, way overvalued. Amazing, right? And like the eurozone, for example, the European Union, the eurozone, had no inflation whatsoever, had disinflation because the euro was overvalued. How did the euro get so overvalued if the eurozone was near collapse? Hmm? Seems weird, right? The high yield, yeah. But it's not just the high yield because the high yield reflects risk. So high yield with the Draghi put, so to speak. Draghi came out, said, with a wink and a nudge, implied that he would bail people out if they put money into Greece, Italy, Spain. Is how it was interpreted. What he actually said was he'd do whatever it took to protect the euro. So suddenly, money went into Greece when interest rates were near 20%, Spain 15%, Italy 13%, right? Ireland 12%. These are incredible, right? So if Draghi says, well, hey man, I'll back you up. If they default, we'll bail you out. Then suddenly there's a lot less risk, and 20% smells pretty good if you have, you know, Draghi backing you up, right? So bada bing, bada boom. Um, money flows to Europe, gets converted into euro, and then that gets converted into the drachma or whatever you want to call it, right? So you buy some Greek bonds at 20%, but you needed the euros first. So the eurozone was at the brink of collapse, and the euro was unbelievably overvalued because all these hedge funds were beating each other up to buy European debt. Okay. So, anyways, that's how all of that happened. So now that we've recovered from that and the euro is dropped precipitously and the pound has dropped precipitously, they're starting to get multi-year highs in inflation. Well, first of all, inflation was zero, so that's not that difficult. But the thing is, they're finally starting to get what they needed, right? And then there's South Africa remains above the target. Good job, South Africa. You're getting your inflation again. Yeah, South Africa, they're really good at inflation. You got to have a skill, right, guys? You looking forward to it? Huh? Where's my South African brethren and brothers and sisters? Looking forward to all that inflation? Yeah. Wait. That means foreign products become expensive for you. What does a Porsche Panamera cost in South Africa? 2.6 mil. And that's for the cheap one, right? That's for your mom's Panamera. Oh, they sold out. Amazon in South Africa sold out of my book, huh? That's cool. Nick's like, and your child's soul. Yeah, that's funny. 150,000. Yeah, that's probably for a cheap one, right? Where do they start here? They start at. You could probably buy a new one for I don't know 80 or something. But anyways, cool. So good job with the inflation. All right. So the OPEC report. Did you guys get that? How many books? How many of my books does South Africa have? I don't know, 3. January OPEC report. You can even view it as a flip book, everybody, or listen to the podcast, right? You click on this, and all you hear is laughter. Live from Vienna. Whoa, that's not what I thought it was going to be like. I heard after the FOMC meeting, they all go to a local bar and get drunk. Yeah. Those are lots of little pissy little trades, man. I'm not saying that that's the right thing. That's just the thing. So, anyways, you can download that. Do you guys want the link? No, what I think most of you guys should be doing is near the London Open, you make 1 or 2 trades and you let them run throughout the day. Or you do a swing trade like I go over every week. You know, you sell on a Monday, you take profit on a Thursday. Okay. So you set up a couple of weekly trades early in the week, then Tuesday, Wednesday, Thursday, you just kind of day trade. There's 2 or 3 times a week you might have a new scalp, and that's that, right? Yeah, you probably got it wrong, right? Anyways, let me finish this. Baltic Dry Index already came out. December CPI at 830. Industrial production capacity utilization. Remember, that's a subcomponent of GDP. Bank of Canada interest rate decision at 10, so obviously you want to stink about CAD. Beige book, CPI, da-di-da-di-da. I missed one, didn't I? Did I have a brain fart? What do we have at around this area? But Dan asks if your trade doesn't work on a Monday, is it done for the rest of the week? Well, it is supposed to be a swing trade, right? So, all right. All right, so here's the beast. What was the trade plan yesterday? Wasn't it sell at 140? See the gray zone? I haven't touched this chart since yesterday. You guys remember that? So you should be up, what, 70 something pips? Mike's got about 45, so a little bit late, but you took the London Open then? Anybody else? Remember, it was going to be a test of patience? Yeah, buck 39.80. So you did London Open. You didn't do it yesterday. Because we were sitting here before. It was great yesterday too. You sell at 140 and drop 25 pips. Then go back up to 140, do it again, drop 25 pips. Whack to 140, do it again, drop 25 pips. It's like frustrating, but if you were chipping away at it, right? Yeah, Nikki did this scalping, huh? Yeah. So anyways, not a great trade though, is it? Because there's still hope and prayers to it. So, yeah. So I don't know. Yeah, this is sort of like a January type move where I expect yen strength. Okay. Uh, but it can peter out by the end of January. So, and here's how I have explained it in the past. Okay, going back many years, I explained that often I look for yen strength in January, and most of the time it ends near the end of January, right? How many people can confirm that? Starts somewhere in January, ends somewhere in January. Anybody? Yipper. And then you sort of get like a bounce rally, which then fails somewhere around March. So down January, let's just say, roughly, right? Up February. These are yen pairs now. So yen pairs down January, up February, sort of down March, right? Is kind of how I envision it in my brain. And of course, last year, all it was is down in January, down in February down to March. So you don't really know, right? Yeah, Bruno says I said the exact same thing a year ago. Well, I was wrong. It just kept going, right? Right. So I don't really know. Has it already happened? Well, did you see like the 300 pip gap in the pound yen on Monday? I mean, how far down is this going to go? I don't know. See, they just I don't know. But wasn't it just like wasn't I in the Caribbean on the side of a volcano and we were staring at 148 on pound yen, right? Isn't that true? We were kind of in that 150 area. All of a sudden we gap open on Monday. We're actually at 136, right? We're talking about somewhere between 1,200 and 1,500 pips. At what point can we say my predicted yen rally is over? I mean, that's a lot of pips, isn't it? To casually, months in advance, say, yeah, the yen's going to get strong, right? It's going to get strong right around Christmas. I mean, it's amazing, actually, isn't it? Like, oh, well, it wasn't a very good year. It only dropped 1,200 pips. Andrew says, what can he read to learn more about the yen to learn how to trade better with it? You know, I actually don't know. The conspiracy theorist little bird that sits on my shoulder every once in a while makes me think it's just central banks doing stuff. So, I don't know. And you'll if you go back and watch that FX Street interview I did, a 1 hour long interview, and I'm wearing a three-piece suit in a tropical third world country. Okay? I said, look, the Japanese yen is going to get strong. And I understand there's no economic reason for it. There's no data that suggests it's going to happen. And there's no technical reason it should happen, right? Do you remember that? This chart was straight up. There was no economic data that was suggesting yen strength. There was no technical data. And I just very casually said, well, it's going to happen. Let me tell you why. Boom! Japanese yen strength, right? So, like, where do you read that? I don't know. I didn't read it. Right? I don't know. So it's more of like that's my alpha, baby. I mean, I don't know. So now I guess you have it. So I guess it's yours. You better open up a TradersWay account. Yeah, I guess. But yeah, so I don't know, and it's an honest answer. If I had read a book, Idiot's Guide to Trading Japanese Yen, I would admit it. So what I called it in the interview is that it was the fundamental analysis of financial flows, not economic data. Yeah. So that's it. But I'm always happy to help. You're my sweet baby. Yeah. No. Yeah. It is an honest answer. I don't know. Yeah. You're my sweet baby. I'll take care of you guys. All right. So anyways, yeah, so is it over? Yeah, I don't know. Yeah, maybe, right? And what did we talk about yesterday? Very often, if you hit this target, this green zone early in the week, and I would consider Monday early in the week, very often you head back up to the weekly central. Okay. So is this going to head farther down or further down? I don't know. I just honestly don't know. Our trade plan yesterday was sell at 140, and there she be. There she be. Uh, and of course, this U.S. dollar weakness we've had recently, I also attribute a lot to just profit taking and stuff like that, right? I've been too long for too long, right? You guys know that song? Is that Randy Travis? Randy Travis started his career as a Forex trader. Okay. So, oil, as they say in America. So we have it down, up, down, up, down. I guess we got to adjust. You gonna consider that a top? So it's not trending at this point. Let me put this out on the daily. So we still have this going down to 50. That's actually that's quite a challenge because of the psych level. So the underlying strategy here is just sell rallies at resistance, right? Where does it go? Because it's not really technical. I don't believe this is truly, a market, right? I think this is just, I think there's a lot of hedging going on. I think there's a lot of shorter term speculation going on, but like, I think it's just simply down to about 50, not quite maybe, or maybe 250, right? Right? 51 or 50, whatever. And then it goes back up, and then it gets around 55, 56, 57, and then it comes back down. And it's not really truly supply and demand and truly open pricing mechanisms. I think it's just sideways forever, right? And that was my analysis even a year ago, right? Right? Can you guys confirm that? That likely a year ago or whenever it was generally back up to the 50s and then sideways, right? The way I recall it, we had this coming down to this area and then up and then down and then generally just sideways. 40s too low, 60s too high. So just sort of sideways, like literally for years. Yeah. So that's an interesting thing. And there's some people when I tell them this, they don't really like it. Oh, did I mention? I don't remember talking about oil at the interview, but if I said neutral, it sounds like me. So I don't know. So yeah, again, I don't really know, but up is the wrong way. 50 is fine. If there's some bad news, yeah, we could get down to the mid 40s, but that doesn't feel good either, you know? So it's just like I don't know. We're just caught on this one. So, is there going to be a time when you play that out on Canadian dollar? Are you neutral on CAD? You could play it where if you can catch like CAD yen on an extreme low and oil is at like 45 for some reason, you could start buying up Canadian dollar with the understanding that it's not likely to drop below 40 or even 43, right? So if you bought it at 45, whatever, 45, 44, 43, closer to what you consider the bottom, at some point that could be like, an all-time low, a generational low. And because I think 10 years from now, oil prices will be higher, right? Maybe even 5 years from now. But, you know, for now, it's neutral, right? So if you can get it at extreme low because of some exogenous shock, then, and you caught like a CAD yen dip, it's cool, man. You might be able to stay with it forever. You know what I mean? FX Ambassador says oil is going down. Well, yeah, I think it's more likely to head down than up because I think the world will learn that the OPEC cartel is not going to be able to stem oil supply, right? But that is still a bet, okay? But I think it's in the cards. You've been too gone for too long. You've been too gone for too long. So baby, why don't you just stay gone? Yeah, so I think a lot of people are taking profit on that US dollar because they've been too long for too long. But, you know, you look at these as opportunities to get back in. Did you look at the WR1 on euro to get short euro dollar? Why? What was one major reason pound yen at 140 was a potential short? Let me give you a hint. It has nothing to do with pound yen. What was one major reason 140 on pound yen was a potential short? And it's not pound yen. Well, psych, sure, sure, but that again, that would be a psychological level for pound yen. Okay, but it's not pound yen, but you could still take a shot on pound yen. Profit taken, yeah, but again, you're talking pound yen, not pound yen. Pound yen was the short, but what was one other reason besides the psychological level of 140.0000? Thank you. Monthly central pivot point on the pound dollar. Hoo-ha! You got it. I think it was 123.40, wasn't it? 123.30, something like that. Yeah. Pound if the pound dollar can't go up and the dollar gets strong again, which I'm a dollar bull, right? So if I'm a dollar bull and I see pound dollar and I'm the bear on pound, right? You remember yesterday I said something like, "Oh, good, Theresa May fixed it. It's all fixed now. Brexit's all fixed. Don't worry, guys." I mean, it was laughable, right? So what was the whole idea of there? Well, if you're still a bear, look for resistance, get ready to sell it, right? So I'm still a bear on the pound. I'm still a bull on the US dollar. Well, the dollar's been weak the last 3 days. Oh, well, forget it then. Forget it. Central banking policy's over then if we've had 3 days of weakness. I mean, it's funny, right? So if you're still a dollar bull and you're still a pound bear, you can look at things like, hey, is the monthly central pivot point a potential level of resistance? Yeah. So what else am I currently a bull on? Japanese yen. So then you look at pound yen, which is more volatile and has a larger average daily range than pound dollar. And especially when the dollar happened to have been weak for several days, why would you take your first shot on pound dollar, right? If US dollar's been weak for the last couple of days, well, couldn't it be weak for one other day? Well, of course. So you don't really know. So anyway, so yesterday we're like, all right, well, we're not quite to the monthly central pivot point on pound dollar. We're not quite to 140. I think we were at 139, and then it went to 139.50, like literally in 5 minutes. So the whole idea yesterday at this point was, well, let's take a look at 140 for a short, and I outlined it and highlighted it and everything. And part of that analysis was the weekly central. So if pound dollar could go a little higher and then start to collapse, well, pound yen should fall off a cliff first because it's faster, more sensitive, and it's already at its psych level, right? Cool, right? So that's all. That's all, just a review. So anyways, oil coming down. Can you see what's probably happening here? I think I'd describe it that way. I had to use pretty colors. Okay. Drop into a smaller time frame. Smells good to me. Right? Sell it at 54, down. Sell it at 53.50, down. It's good stuff, right? Abituka. Ba ba ba. Um, what's going on for what? Well, what do you want to do next? Aussie's caught on a monthly M4, so there's going to be profit taking, right? Aussie yen is Oscar Mike, so maybe that'll change. Okay, so what I see is Aussie dollar at resistance. Will Aussie yen fall even though it's bullish? Oh, you want me to do gold? Yeah, all right. I can do that if you want. I'm just let me just finish this thought here. There's nothing bearish on this, right? So if there was going to be bearishness, where would it come from? Well, the first thing that this chart tells me is the answer is R1. So that means we need to make a monthly breakout on Aussie dollar, which would be difficult because we're at, so if you're looking at Aussie dollar, and of course I'm not showing Aussie dollar, so pull up your own damn Aussie dollar. Oh, that was grumpy. Sorry. Look, I'm looking at Aussie dollar. People always ask, Wayne, you're such a loser. Why do you have 18 screens? What are you trying to prove anyways? People get so angry about this. What do you have 18 screens? You're like a loser or something. You're so disgusting. What an ugly human being. I'm like, really? I just have 18 screens because I use them. You ever know stuff like that? Just there are some major haters, huh? Why do I have 18 screens? So I look over there and I say, well, Aussie dollars at monthly M4, and then I look just above it, and weekly R1. That takes me less than 2 seconds. Wayne, you're such a Luther. What are you trying to prove? Probably the worst trader in the whole world. Okay. Yeah, I just did it for the chicks, man. I'm sorry, honey. I'm sorry. Yeah, my wife almost came in and knocked my head off. Yeah. Yeah, because the chicks dig it. I'm like, God, he was such a loser, but he had 18 screens. He's so handsome. Yeah. Get a Harley for chicks? No. If I bought a Harley, a bunch of dudes would like hang out and look at my Harley. Yeah, you want to pick up dudes, get a Harley. So anyways, yeah, so this tells me R1. What? But I don't want to hear that. So we got to play it like the dollar. Okay, let's go back. We're looking at Aussie yen. Over here, you can't quite see, my head's in the way. Over here is my Aussie. This chart tells me Aussie dollars at monthly M4. This chart tells me Aussie dollar is at weekly R1. Both are major levels of resistance. That M4 is a key monthly. Weekly R1 is a key weekly for resistance. So it's a confluence. Tells me we're not going to get above 76. So we're within 50 pips of a top on Aussie dollar. Thus, coming over to this chart, or actually for me, this chart, this chart over here is Aussie yen, and it says there's no sign whatsoever on Aussie yen the Aussie yen's going to drop. So coming back to the one you see, which is this screen, uh, is it going to be weekly central pivot point? That'd be interesting. Uh, pivot theory tells me if S1 is the bottom, R1 is the top. But Aussie dollar is telling us it's going to do this, and because weekly central is the top in that case, then the target is here, 84.50. So what Aussie US dollar is telling us is that soon the Aussie yen might reverse and drop from about 86, let's say, 86.70 to 86.00-ish, right? And then drop from 80, let's say 86 to 84 and a half. What do you stink? Too much? All right, let's do an easy one. Did you sell the euro yen at the 4-hour 21? Maybe that's all there is. You have no other alpha. Oh, except I already got you short on this one. Sorry. Wait, did I already do your work? Sorry. This says sell about 123.50. 123.50 is the sell. Huh. Sorry. That would be a position trade, Nick. That's not, to me, a swing trade is like a trade of the week. Day trade is day of the trade of the day. This is a weekly, man. So look at what I'm predicting here. Sell it at 123.50. Well, what is it now? 121. So you're already 250 pips profit. And we're heading down to 86. What? That's the trade of the year. Was that going to happen? I don't know. I don't know. It sounds ridiculous, but we're moving in the right direction anyways. Sir, why don't you tell me your trade plan, or did you post it on Forex.Today? Well, let me reverse the question. Does anyone have a post on Forex.Today they would like me to review? Post a link. This is Dre's first post ever. Yeah, post a link. I'll pop it open. Let's take a look. Let's sniff it. Over to go. Why I am shorting pound kiwi? You lost your mind. All right. All right. Let's take a look. Do 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 do. Ding 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 ding. All right. Let's say first post. Blah 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 blah. Great. It was great. Swap trade. I'm bear on pound. Bullish on kiwi. Okay. Since the beginning of the year, pound. Okay. Well, first of all, why are you bullish on kiwi? Boom, 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 boom. So Nick, can you make that comment on his post? You say, "Hey, I noticed dairy prices have been down, and that could be that could hurt kiwi." Okay, I know you can, Nick. Just looking for so you don't have a real reason. You're just long kiwi for some reason. Well, at least tell me you're long because of the positive carry, the high interest rate. Okay. All right, so let's see. All right, there's a lot going on. Not sure what all this is about. This looks like a disaster here. And let's see. Do you have those pivots? So like this area here to me doesn't seem to have a lot of value. So I'm wondering if you could have a second time frame on here. But all right, so 4 hours, you have down, up. Okay, you have a, an arrow here that says up. That's not a smart trade. And you don't have an arrow that says down. So you have the dumb arrow up, and you don't have a good arrow down. Same thing, dumb arrow up. I don't know what that means. Sometimes people mean that to buy it. Okay, so I don't know what this is, and you're missing the obvious short. I don't know what this is. You're missing the obvious short. Gaps down. You take a buy here. That's fine. Kind of hard to predict this was going to happen. This was all Theresa May, but whatever. And then the sell here, that's fine. And see, now you do have a down arrow. And you're on this candle here, which is, you're like 12 hours late. But again, that's just that one time frame. So you sold here at resistance. That's fine. Um, the better trades were here and here, though. So to me, you missed the best trades. This is not really predictable. It happened after Theresa May's speech. And then really selling up high on here is a bit of a gamble because it's after a higher high. So there's still a large propensity for it to hit this area here, which you don't have marked. So let me get my drawing tool. I've been too gone. Obviously, it's an indicator that he uses. Right, but I'm pointing out, Thomas, is that it makes no sense whatsoever. In fact, I don't know what it means. If it means buy, then it's like the dumbest indicator to ever been invented by. They probably created a dumb robot that builds other dumb robots efficiently. No, stoke arrows. I still don't get it, and it's still dumb. Whatever. If it means buy, it's dumb. Okay. And then you have one sell arrow. And okay, that is the one I set up. It is 12 hours late, so that's not very good. And there's no sell arrow here, no sell arrow here. And those are the easiest trades ever. So anyway, so I'm just picking on it, right? You have it on your chart. So I'm allowed to criticize, right? You know what I'm talking about? Yeah. So I don't get it, but up would be bad. Up would be bad. So I don't know. All right. So anyways, so one thing that you are missing on this chart is this high needs to come across. Okay. And there is a propensity to get sort of one of these things. Okay. And you're missing that here on your projection. Okay. So instead of this arrow long, I mean, look how bad it is, in fact. It picks the top. It tells you to buy at resistance, which is dumb. What you should be doing is selling at the moving average. Sell, on the retracement back to the roll reversal. Okay. And then remember the way I taught you how to trade, this area here is completely obviously profit taking, get out type stuff, right? Thank you on the CPI. I don't know why I didn't get my. Am I not running it? I guess I don't have Trade the News going. Oh, shameful. Been too gone. Okay. You like MACD arrows and stuff. Yeah, it does. I don't care what is making the arrows. You need to get rid of them. Okay. Because especially if you're a newer trader, they're just going to confuse you. You're going to make mistakes. So remember, if MACD crosses up in a downtrend, it doesn't mean up. Okay. So what you do here, by the way, news seems like it was as expected. Okay. All right. So you get the new low. You fib in a scenario like this. Okay. New low. You fib in a scenario like this. These are fib levels. Okay. New low. But remember, this we know is the target. And it gapped like 300 pips or almost, right? So you're already really, as a bear, you're already done for the week. And our next sell zone as a bear was the 140 psych level. Okay. And your little down arrow is, 12 to 16 hours after you touched 140. Okay. And so now we got to be careful because this is support. See, we didn't have support before. This was support actually. Let me just use my arrow, right? This was support. We knew that. Okay. And now we know this is support. So there is more than a reasonable chance that someone comes along and goes, "Zoop." I wanted that to be drawing. Does this. Okay. So my advice to people is if you're going to trade 140, sell 140. So it said the earlier today that they were short at like 139.80. Okay, well that's not 140, is it? So try to get in there at one. If the psych level is 140, the closer you are to 140, the smaller the stop you need. Therefore, the less risk you take. So if you're going to be aggressive enough that you take less risk. You know what the actual top was? 140.13. So if you had a 25 pip or 30 pip or a 50 pip stop, those are all reasonable stops for like a day trade, even a spot trade, right? So if you sold at 140 or 139.95, your your 25 or 30 pip would have been enough, right? So for example, so if you're aggressive on the entry because of the confluence of data, you only need to have a 25 pip stop. If you sell at 75 or 80, you're going to need a 50 pip stop. Therefore, just because your entry was better, you end up taking half the risk. You see what I mean? Now, Elvis has took a 1 for 150 pip scalp. Well, I wouldn't call that good either, right? Especially on pound yen. Pound yen, man. You know, you should get paid on that. Yeah. Remember, at the end of the year, what makes a difference is your 3 and 4 and 500 pip winners. Okay. So set yourself up if you're trading in the direction of the prevailing trend on pound yen, you should feel like it's not a win unless it's 300 pips or more. Just like, let's say, psychologically. Because you know it moves. And if you're going to make 1,000 pips, you're going to make 1,000 pips on pound yen, right? FX's ambassador says we're going back up to a buck 35. We're back down to a buck 35, right? Great. Well, then it should be a shame if you didn't make 300 along the way, right? Especially if you shorted at 140, like a 500 pip move. You're like, dude, I made 50 pips. And all of a sudden, you're like, really? You made 50 pips on a 500 pip move? Oh, yeah, and I was in at the exact top. Now you're like, well, you did all the hard work. You just didn't get paid, right? Yeah, okay, right. But, so one thing, so I'm just picking on like not your exact trade, Elvis. I'm just kind of sharing a different mindset. Some currencies move low and slow, if you will, small trading ranges and stuff. And some have more, right? So if you find yourself in a very good trade setup, like shorting right at 140, the confluence of resistance on the pound dollar, so it really does look like potential, you know, dollar weakness. And if you got the yen strength, oy vey, right? So then some currency pairs, you should try to hit home runs. You're like, oh my God, I just nailed this pound yen. Okay. Where Kiwi dollar might move 500 pips in a year, right? If you were going to make a quick 500 pips, it's probably going to be on pound yen. So if you can jam your stop at break even, you know what I mean? That's where you're going to hit a home run. And you got to hit home runs. You cannot become filthy, stinking rich trading anything really, unless you have some home runs. You just can't do it at the expense of risk, right? Okay, Dre, good. Well, I can't wait to see your follow up tomorrow. Okay, cool. Would anybody else like me to review their setup? I have 6 minutes. Well, there you go, Dre. See, that's what we need. 700 pips. Now, at some point, remember, you do need to take profit because it's your job to take profit. And you can add more trades along the way. That's fine. So, like, sometimes on moves like that, what I'll do is, like, let's say 150, 150 OCOs or not 150, 150, like 150, 300 or 100, 300. So imagine all these pullbacks, you're doing 100, 300. So you have multiple trades open, but every time, instead of being up 700 pips, you've taken 4 or 5 positions over the course of time, several of which have already maxed out for 300. One is almost up for 300. And you got a couple other that are up, 100 pips or so, and that kind of stuff. So you have 7,000 pips or 700? Well, 700 times 10, that would be 7,000, right? Then yeah, cool. That's how you do it. Yeah, that's how you do it. Well, Rob says, wow, which is nice. He's saying high five. Bear in mind, I prepared you weeks in advance for this to happen, right? So now all you had to do is trade it, right? There's a lot of people that just do not understand. There are a lot of people that were just not ready for yen strength. Well, Nick, it's 10 trades though, right? That's the idea. No, no, I'm not saying that for me. I'm just saying, you had a real opportunity, right? You had a real opportunity to do what Dre is doing. You had a chance to prepare for likely yen strength, and then the yen got strong, right? You didn't even have to expect it. It was kind of teed up. So now you trade it, right? So good job. Dre's on it. Blah, 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 blah. Anybody else? Like, come on, I got one more. Who wants me? Jimmy, Aaron, Julie, Aaron. I got it. Kiwi, your Kiwi one, yeah, cool. Oh wait, I forgot to I got forgot to like Dre. Oh, I guess I could have just done there. I clicked on it. All right, we'll do it this way. Thank you, Dre. Comment. All right. Now, if I'm leaving comments, I think it would be appropriate. Thank you, Nick. Nick, you should get your profile picture up there. If I'm giving comments, it would be really nice if you guys could leave your thought too, even if it's just a few thoughts or even a thank you, but just you should leave some feedback, right? If we're all looking at it together, right? You would think that a few of you guys, at least a dozen or two dozen comments could be left, right? All right, so this is Kiwi dollar. Okay, good. So I see we got a trend in play. Looking for dollar strength, right? So this is fine, fine. Not sure why you didn't connect these, but I guess you're doing that. Okay, that's fine. Down, connecting these, fine. Up, okay. Now, one caveat here. I'm not a big fan of doing this. I think I talked about it yesterday as well. I think I think a lot of traders um, spend a lot of focus on such channels, and maybe it's just lots of free education or something on them, or Not sure why people care so much about channels. Maybe just because it's a pattern. But I think at the end of the day, professional institutional traders just don't care as much, or maybe at all. Okay. Where some of these patterns come into play is because there's a trend, a downtrend, a rally, a downtrend, a rally, a downtrend. Okay. So the most important aspect here is we're no longer making higher highs. To me, that's what's important. Connecting this to that, and then assuming that in the future that's going to be important. I'm not a firm believer in that. And like, then why didn't this one work, for example? Why didn't this hit the bottom? Why didn't this hit the top? And why didn't you draw your channel that way, right? Why isn't your channel drawn this way? So it's very subjective. Okay, so this is just my thinking, right? Through my, I've been trading a while, so it's just my experience. So I'd rather you kind of pay attention to maybe some other things. So to me, a lower high is a price action, predict low, right? Once you make this low, you fib 3A2, 50%, 618. Okay, down. You would think the same thing, right? The fact that we went through here to here actually predicts that we're not going to make a low. Or certainly confirms US dollar weakness, huh? The reason for it is this is already a 100% retracement or 98, all right? It's even beyond 786. So I would be cautionary here. And I think what could happen is it probably will drop because it is some level of resistance. You can see it here and even kind of these shoulders, right? So I think what I would be doing is I'd be paying attention to maybe this consolidating in a move like this. Okay. But I don't think I'd be targeting here. So if you're up near R1 right now, I think maybe we could look at an S1 bottom. So maybe it bottoms here. Okay. But it just wouldn't be this week. So, okay. So that's what it's telling me. I'm not adding any other analysis like fundamentals or anything like that. Okay. Okay. And can you include a little bit more detail than that, please, Aaron? Because of the 100% retracement from the last low, I would assume consolidation back near the support level. I would not assume a new lower low. According to Fibonacci analysis. Okay? Retrenchment. All right, but you see how long that took me? How long did that take me? Just post a comment. This is a community of sharing and helping each other. So I just left a comment it would be nice if some of you guys left a comment. So, over 100 people just watch me do this. So I would, instead of one comment, I'd hope to see 25 or 30 comments. Okay? Come on, guys, pay it back. Make this community work. So, got to jump, babe. I hope you enjoyed yourself today. I hope you found it helpful. And I hope to see you tomorrow. So peace on earth. May the pips be with you. May your profits be above average. Time to get out of that South African rand before it turns into toilet paper, huh? Huh? That inflation's coming. The inflation wave, the inflation tsunami for South Africa is approaching, huh? Spend it while you can. I think that's the South African national anthem, isn't it? Time to transfer the funds to TradersWay. I'll never forget though. I'm checking into my hotel, and there's two dudes checking in front of me, two locals, South Africans, anyways. And one guy says to the other, it's only rand. It's only rand. It's just classic. Don't worry about it. It's only rand. It's so. Anyways, see you guys soon. Love it, babe. I got to jump. It's been real.